In the coming days, the highly anticipated event in the cryptocurrency market, Bitcoin Halving, will take place, a regular reduction in the rewards received by miners. After every 210,000 mined blocks, there is a programmed reduction in the number of Bitcoins generated through mining. Given that the average time to mine a new block is 10 minutes, halvings occur roughly every 4 years. The current halving will be only the fourth in Bitcoin's history. When the main cryptocurrency was launched in 2009, miners received 50 Bitcoins per block. Then the reward was reduced to 25 during the first halving in 2012, to 12.5 in 2016, to 6.25 in 2020, and will decrease to 3.125 tokens in April of this year. Experts note that this halving occurs under new conditions and may have a different effect on the market compared to previous ones. What is the significance of this event? How will it affect the price of the main cryptocurrency? And what other factors will be determining for the cryptocurrency market in the near future? Halving is not scheduled for a specific date. It is programmed based on a specific block mined by miners. The average time between block mining is 10 minutes, but this is not a constant number. It depends on many factors, including sheer luck. The time between adjacent blocks can range from seconds to half an hour. The mechanism for adjusting mining difficulty can regulate the speed to aim for 10 minutes, but it never achieves such precision. For this reason, there is no exact time when halving will occur. By the evening of April 15th, around 600 blocks still needed to be mined, which is approximately 6,000 minutes. But these are rough estimates. There may be deviations in one direction or the other, although usually within 10%. Based on average estimates, halving is expected to occur around the transition from April 19th to April 20th, most likely late in the evening on April 19th. As Bloomberg notes, for investors already holding Bitcoins, halving changes nothing except for price fluctuations. However, it will be impossible to accurately attribute market dynamics solely to halving. Some of you could say, bro, the economic impact of halving will be negligible. And you will be right. After the reduction in the number of newly minted Bitcoins, miners' pressure on the market will change by only a fraction of a percent. Speculators have long dominated the majority of trades, and the volumes from miners simply dissolve into the overall trading volume. But the psychological effect is more important here. After all previous halvings, the price of the leading cryptocurrency has multiplied. After the first reward reduction for miners, the price increased by 100 times. After the second, by 30 times. After the third, by 20 times. Most investors and analysts expect this pattern to continue, and with their behavior, they create self-fulfilling prophecies. If the majority believes in growth, they are more willing to buy the coin, and the price rises. This is purely a psychological factor tied to market cyclicality. Invest future analysts are skeptical about the prospects of halving's impact on the price of Bitcoin. Halving has long become a symbolic event, as more than 90% of Bitcoins are already in the market. Also, halving has long been priced into Bitcoin, and many will probably want to sell on the news after it, experts add. Fred Thiel, CEO of the American mining company Marathon Digital Holdings Inc., also expressed the opinion in an interview with Bloomberg TV that halving is already partially factored into the price of Bitcoin. He pointed out that the leading cryptocurrency has already appreciated by more than 60% since the beginning of the year, due to optimism regarding the approval of Bitcoin ETFs in the US. The price of Bitcoin reached a historic high of $73,800 on March 14th, after which it corrected to around $66,000. The approval of ETFs, which was hugely successful, attracted capital to the market and essentially already led to price increases that we would typically observe 3 to 6 months after halving. Morningstar notes that the current market dynamics are unique in the history of cryptocurrency and require a reassessment of the potential consequences of halving. Researchers noted that the effect of halving gradually diminished over time, and each of these events led to a decrease in the rate of Bitcoin price growth. Moreover, Bitcoin is currently near its historic high. During previous halvings, it traded 40–50% lower than previous highs. Among other things, one of the wild cards of the current cycle is the launch of exchange-traded cryptocurrency products. The emergence of institutional players is changing the overall habits of Bitcoin investors. Long-term holders are becoming increasingly important, and the amount of Bitcoins held on exchanges is at a 5-year low. If this trend continues, the supply of Bitcoins will decrease, laying the groundwork for potential sharp price increases. Morningstar adds that although halving will have some impact on the price of Bitcoin and the shares of publicly traded miners, it will have no direct consequences for ETF holders. So I've made my conclusions. What about you, bro? Stay informed and think twice. See you soon.